All right. Hope you guys are doing well. What we're going to be talking about today is how to journalize payroll transactions for your employees as well as for yourself as the employer. So what you'll see here is this is from 13.8 and is an example of the two different transactions. The first transaction you'll see, December 31st, that starts with a debit to salaries expense, is your transaction that is covering your employee's pay. The second transaction is where you're talking about the payroll tax expense. This is the taxes that you are going to pay for you as the employer. Okay, now both transactions are based off the gross pay that you will pay your employees. So when you take all your employees and you add up all their gross pay, that is going to be the debited amount to salaries expense. Okay. Cash and bank will be equivalent to the net pay because you're going to end up writing a check from your cash and bank to your payroll account to send to your employees. And then your Social Security tax payable, Medicare, federal income tax, state income tax, and if there's any union dues or anything like that, will be listed in the credit as to the payable accounts because you're eventually going to pay these out. But these are the amounts that you have withheld from your employees' checks. Okay, so again, what this means is salaries expense is equal to your gross pay, the cash and bank is equal to the net pay, and this is all the deductions. Again, as always, keeping the golden rule of accounting, debits must always equal credits. All right, now the bottom transaction for the payroll tax expense. Okay, so the top part is for what we must pay because we got them from our employees. This bottom transaction for payroll tax expense, this is what we pay as the employer. Since we can't really base it off the money we earn because the money we earn is based off the profit of our company essentially, we use the gross pay from the employees, that $1,091.90, and that's what we take times all of our percentages. So for example, as an employer, we not only pay Social Security, Medicare from our employees, we will pay it as employer. So you take that 1091.9 and you multiply it times the 6.2% and the 1.45%, giving you the same amounts. Now, this always seems to confuse people because you see the same amounts for both the employees and the employers. Okay, but yes, you will actually pay it twice because you're paying it for the employees and yourself. Now, employees pay federal income tax and state income tax. As the employer, you pay an unemployment tax. And this goes to the government to help for unemployment funds for federal and state. Now, the percentages will always be listed in your assignment. One's like 0.8%. But you basically take that gross pay amount times that percentage, and that's where you get these from. And then you add these four up, and that is your debit to payroll tax expense. So these two are then going to be listed in your general journal as a transaction. Okay? If you have any questions, please let me know.